Hey folks, and welcome to the Pipnotic Symposium for the 25th of April 2023. Sorry for the delay in doing these. I seem to be saying that a lot at the moment. We just moved into our new house 2 nights ago. We've slept here 2 nights, and it's still a building site and super chaotic, and we don't have internet yet, and yeah, there are still lots and lots of things wrong. So we've been up to our eyeballs doing stuff, but we're eating here. We have running water, electricity, and the things that you need in order to live relatively comfortably, or rather, the things that you need to differentiate between camping and living in a house. We just about have moved away from the camping category into a house, so we're pretty excited to be here. It's a really beautiful area. I'll send some more pictures from the location. It's pretty cool. Anyway, but I've been up to my eyeballs, so I actually haven't been trading, but buy and sell zones has been trading a lot, which has been really great. And so just want to talk a little bit about some ideas, and then I'll talk about buy and sell zone configuration for those of you who are using it. Just so you can kind of see what I'm doing. It's pretty much hands off. I do tend to meddle a little bit, and most of the time I end up closing a trade that was pretty close to the target, that didn't quite get there, but it ended up going to the target anyway. So I'm getting out of some trades a little bit early. But I had a couple of losses last week on the daily and the weekly that were nicely in profit before they got stopped out. And so, yeah, this is kind of the discussion, where you kind of have to figure out, okay, do I meddle or do I not meddle? So you have to make that choice, and it's a pretty blurry line. There is no right or wrong. You kind of have to maybe look at the other indicators, the histogram, the currency strength, supply and demand, and just see what price is doing and where it's at before you make these decisions. But you could leave it and let it run on autopilot, and I think that would probably be just fine as well. But it's, as I mentioned, it's not that easy. Good. Okay, so let's talk a little bit about currency strength briefly, because I think it's a pretty exciting animal. And before we do, I just want to bring your attention that tonight, 8 o'clock European Standard Time, Anders Dale is giving a talk in Denmark, which is pretty cool. So if you guys are interested in listening to Anders share his wisdom, and I advise you to do so because he's got a lot of it, head on over to daytrader.dk.no or .se and sign up there. So I'm on the Danish website just to show you what it is, daytrader.dk, but they also have like the Norwegian.no and the Swedish.se. But here they have this webinar, okay, and it's going to be in Danish, so unless you guys are super fast with a dictionary, the non-Danish, Swedish, or Norwegian speakers, maybe it might be a little bit difficult to get a grasp of. But there have been some really cool guys speaking. Actually, a lot of these guys are really awesome, and some of them are doing some pretty sweet stuff. So I recommend for you guys to jump on. But he's talking tonight, so 8 o'clock European Standard Time. That's about 2 o'clock in the morning for me and on Singapore time. But that'll be a really interesting webinar. So yeah, highly recommendable. Okay, so we're going to talk a little bit about currency strength now before we do anything else, and something I think is really fascinating, something that really excites me. That is this whole notion of cycles, where you have things that are expanding and then things that are contracting. And this can be measured in pretty much anything, in moods, bird migration patterns, in waves, the swell of the rate of swell in the tides and whatnot. It's super fascinating. Temperatures, both short term but also very long term, I mean decade long cycles of temperatures, and how right now, for example, we're entering in the beginning of a warm cycle. But if you look historically, we've been here before, a long time ago. But this quote unquote warm cycle is not anything that we have not seen before. You can also see it in asset prices, where you have asset prices that expand. Okay, they become more and more premium, then they contract, then they become more discounted, and it's really fascinating, especially if you are able to visualize this information. Okay, and we have some tools at Pipnotic that I think all of you are aware of. And we have the currency strength software, which is the one I have down here at the bottom of the chart, and we also have the histogram. And these two tools are really awesome for helping us to visualize these cycles, because they're quite difficult to see if you're just looking at price. You can, and many people are good at it. But it's much easier if you have some kind of a visual, maybe a secondary representation of the underlying cycles, so the expansion and the contraction phases. Okay, and so if we focus on a couple of key details on this particular chart. Just gonna see what this color's like. That's okay. Okay, so we have right here we had a very strong yen, and we had a very weak Swiss franc. Okay, here we had a very strong Canadian dollar and a very weak yen. Okay, and here we have the beginning of a strong Swiss franc and the beginning of a weak Canadian dollar. Okay, and so this is super interesting stuff, because when prices begin to diverge, like they've done, as a matter of fact, I'm just gonna zoom out just a little bit so we can see a little bit more data. Okay, so here, let's let it update. Okay, here we can see pretty clearly. I mean, all of these currencies, they're overlapped, so it's a little bit difficult to see. But if we focus on the purple one, which is Japanese yen, I mean, we can see how prices come down, the index of it goes down, and it goes up, and then it goes down, and then it slowly starts to go up, and now we're about right here. It's very interesting. That's a bad line. It's very interesting how these line up very nicely. So we have the end of a bear cycle. Okay, it starts here, ends here, and this is the beginning of a bull cycle, which starts here, ends here, and then we have the beginning of the bear cycle, which starts here and ends here. Okay, and this is super interesting, because if you are able to align these nicely relative to the other currencies, then you can pick the areas of supply and demand that are close relative to where we are during these periods of expansion and contraction. Whenever you see, for example, here we have the American dollar, the green line. Whenever it pokes out as being the strongest currency relative to all of the others, it doesn't stay there long. Okay, I mean, it was the highest one here, and now it was the lowest one. The lowest one here, okay, and now it's kind of stuck in the middle. But in the meantime, we have the Swiss franc, which was the strongest one here, and then it was the weakest. Okay, and so whenever you have a currency that is sticking out, okay, that's sticking its head above the others, like we have here. Okay, we have the American dollar, like we have the Japanese yen, the Australian dollar, a couple of times. We got this here. We got Swiss franc, Japanese yen, Canadian, Japanese, Swiss franc, Japanese, and now we have the Swiss franc and the Canadian dollar. Whenever you see that, I mean, that's telling you, okay, it's time to pay attention to these two currencies, because I mean, they're not going to continue forever. The Swiss franc is not going to keep going to the moon, and this one is not going to continue to go down. I mean, they're going to stop. Okay, they're going to stop. They're going to reach exhaustion, and they're going to move back. And this one's going to do the same. It's going to reach exhaustion. It's going to reach like a bottom, and then it's going to move back. Okay, and so what you want to do is you want to learn to pair these currencies, based on how they are performing relative to the others. So here we have. Let's just do that. So let's just look here. We have the Australian dollar, American dollar, Australian dollar, American dollar. So let me put that on here quickly. And then it'll update for a wee moment. Okay. And so here you can see we had, let me draw a line. We had the bottom. So this is like a strong American dollar, weak Australian dollar. Okay, so that's what we have there, and it was telling us this at what? Or at an area of daily demand. Here you can see the box, which was removed now by this area here. Okay, so right when price got to it, we just go straight on that. We were peaking for both of those two currencies at daily demand right there. Okay, so that's a pretty big deal. Okay, so that tells us that, yeah, wow, maybe it's time for these two currencies to take a breather and begin to converge towards one another once more. Okay, let's try and find another example. Let's have a look at the Swiss franc versus the Canadian dollar, because this is bleeding edge. It's a CAD franc. And as you can see here, we have a very weak Swiss franc, and we have a very weak Canadian dollar and a very strong Swiss franc. And once the GFX clicks on, then you'll see that once more. But it's moving down, and we have a price inefficiency right here, price imbalance. I mean, prices came from here. Okay, parent, child, tested, now it's gone. Okay, and so, I mean, this one here is very low. So what we need to do is, maybe we need to go to the daily chart and have a look and see if there's something else that's lining up. And looking on this one here, we can't really see anything, can we? We can just see that it's really low. So we're going to have to scroll back a little bit to see where price is. I have to go back quite far, I can see. And you can see, there we are, see that prices are really close to this low here. Okay, right here. What happened last time price came down to this price point? We had huge crash. Okay, price came down. We flew down. How far is that? That's really far. What was it? 200 pips. That's huge. And that was here. It came there and we had a huge rejection. Okay, does that mean that we're going to turn around right now? It doesn't necessarily, but what it is telling us is that we are moving. So we are very extreme on the 4-hour chart. Okay, so the Swiss franc was the strongest, which it is on the daily chart as well, and the Canadian was the weakest. And this is happening right here at the very, very low of here. Okay, just here. Okay, so this is actually my buy and sell zone account that it's running on. 100% automated, which is pretty interesting. So we'll look at that in a second, just to explain why there are orders on there. But right now you can see that we are getting very close to here. So if prices come down to here and we move to around the low of this, and we move beyond just a little bit at the same time while we are reaching the end of this cycle, which is very clear on the 4-hour chart, and we're at the big figure, the 0.6500. I mean, we have demand. Okay, we don't have demand. We have the beginning of a buy zone, which is where I attach this box on that low. We have the big figure. That's another reason. We have extreme currency strength divergence, reaching potentially the end of a cycle, and all of these line up right here on this box. I mean, that's a good reason to pay attention, And so this is just a really nice example of a trade that you could take with confidence, knowing that we have 3 things lining up, all of which are pointing in the direction of a shorter term correction. Okay, good. Let's maybe have a look at one other example. Let's go on the 1-hour chart and see if anything leaps out at us here. All right, so here, just to have a gander, let's have a look at the kiwi, which is brown. I use the color brown to tell us that soil is brown and grass grows out of the soil and cows eat grass. Okay, so New Zealand is known for their for their cows, their dairy products, and we have the green, which is a greenback. So let's go to the Kiwi American dollar. And at this point, this should have been really low, right here, right here. So this is where we started to move lower. Okay, so here we had a huge swing. Sorry, yeah, still the building site, as I mentioned, so I apologize. There's a guy, he's building the deck down below. And so we have the big surge higher, the strength in the Kiwi dollar here, and then an immediate sell-off. You can see that right here. So it was from the strongest to the weakness in a few hours, in half a day. Okay, it happened like that, very, very quick. At the same time, we had the American dollar, which was driving it lower. Okay, so you can see just here, when we're moving sideways, just here, we had a very strong American dollar, a very weak Kiwi dollar, telling us this is likely going to continue a little bit lower, maybe not. But what we are seeing, which is more important, is that we are likely going to see these end. So the Kiwi is going to pick up in strength. The American dollar is going to is going to decrease in strength. And this happens at an hourly demand, which is nested with this daily demand right here. Okay, so price tests it once. We go into it. Okay, so we had the really strong signal, which is right there. Price had a little bit more of a run deeper, which is very, very common. Okay, we spoke about, in the last video, we spoke about this, when you have a sideways price movement, prices are happy trading there, and then it breaks out to one side, then it comes back. And this breaking out is telling us that we're likely going to move in the opposite direction, shorter term. Okay, and we saw something similar to that. We just saw at least price poke into this daily area of demand here at the same time that we were kind of reaching this cycle completion just here. Okay, super interesting. And these are happening all the time. There was another one here. This is the Japanese yen versus the Kiwi dollar. Okay, and this probably was a bit of a bigger move because we had a huge decrease in strength in the yen relative to the Kiwi. So let's look at that as the last example. So right here, we should have been moved down. Yeah. So right there, this is where we bottomed out and we started to turn around. Okay, there we are. It's a huge decrease. We started to pop. Okay. And here we have a big departure. Price pulls back, we establish the buy zone, and then we leave. Okay, and so if we just mark off the low around here, and then we go to maybe a bigger time frame, the 4-hour, the daily, and see, well, here we managed to move into, we had the buy zone that was here, right there, and price has just moved into the buy zone, and this is where they turned around. The buy zone was historically here, and it moved a little bit lower here, and it moved lower down to here. Okay, all of these happened. Sorry, and the last one happened at the point where we saw a huge divergence in the strength between the Kiwi and the Japanese yen. Okay, so super interesting. Okay, let's talk about something else now. Let's talk about the buy and sell zones algo. And so I have this running on a VPS, and I have it running on the daily and the weekly chart. And what it's doing is it's simply scanning all forex pairs and some commodities, and it's just putting pending orders with a risk reward of 1-to-1. So if we have a look at the results so far, it's just been running for, how long has it been running? It's like a little test account that I can use to help validate hypothesis. And it's looking like this. So far, so good. So the risk reward is going to be about the same. Average profit trade, 8. Average loss trades, about 8. So they're about the same, which makes perfect sense. And it's looking pretty interesting. This is a sample size, which is quite small, 17 trades, so not a lot. Winning about 62% of our trades. our short trades are winning about 66% of our long trades. So there's a skew that is positive for the bottom line, which is really, really interesting. Okay, and so, I mean, essentially what I'm doing is I have set up buy and sell zones to run. In default settings, I have the risk to reward ratio is 1.5. The price imbalance period is 1. Max accumulation distribution is set to 3. Start bar is 1. Last bar is 20. Okay, so that means that it's not going to look at any price bars or any candles that are more than 20 periods old. It's only going to focus on bleeding edge. So we're only seeing the most recent price, which seems to be most beneficial. Okay, so this is super interesting, and it's just running all the time. We have the stop multiplier, which is 2, so we're looking 2 times the size of the area of supply and demand. So the entry would go here, the stop would go down here, so 2 times that, and target would be the same as that. Okay, so we have a 1-to-1 risk reward. Okay, and these 2 settings are not in your version. This is like the beta testing stuff. Yeah, and that's what we have, and that's it. Weekly, daily data, and it's looking like that so far. So very, very interesting indeed. You can see here daily, weekly, daily. So you can see all the price data here. I only took the past month. I think I'm missing a little bit of data, a few more trades because it's been going a little bit longer than that. But it's pretty good. It's doing pretty good actually. Yeah, I mean, for when was the first trade executed? Yeah, we're missing some data. So this one was the 17th of April. We have the 13th, 12th, 7th, 3rd was the earliest one. Okay, here, so we're going from the end of last month, so just under a month. Just under a month. And we've had some pretty good returns. All right, just had to mute there. They're cutting some wood. All right, this is getting silly trying to pause between cuts of wood. So we're doing maybe about 4 or 5% in the month so far on pretty much 100% autopilot. So it's pretty exciting stuff. And we're also working on, in the beta group, another configuration, which is let me just show it to you quickly, where we have the release. Okay, this setting here, enable release mode, which I touched on last webinar or symposium, where instead of like waiting for a pullback, it simply gets in as soon as the pattern is formed. So as soon as this area is qualified, it sells. It sells right here. Okay, in anticipation that it continues. Right here, it would buy right here, anticipation that prices would continue. And Andrew and Todd and Karsten and Annas are all beginning to draw similar conclusions, which is for certain currency pairs, for certain times of the day, the Asian session seems to be quite profitable. In this particular configuration, the results are looking really, really good. So we still need a little bit more data. We have a sample size of several hundred trades, but things are beginning to look pretty cool. So now we have to. Andrew recently changed the configuration now to exclude some losing assets. So now he's refined it to only certain currency pairs. I think there were 19 currency pairs, and only trading during the Asian session. And since he did that, the results have improved dramatically. Okay, I can just show you one of Andrew's accounts here, where I believe it was on the 13th is when he made this change. Instead of having, I mean, essentially what we had before was an equity curve that looked like that. It wasn't really going anywhere. Actually, no, it was bleeding. It was hemorrhaging money quite seriously. But since he had since he made this change, which I believe was on this day, we've seen like a nice steady increase in equity as a result, which is pretty exciting. So yeah, so we're all pretty excited. Everyone's working on different time frames and whatnot, and slowly, we're beginning to draw the same conclusions. I have some conclusions that I have based on some testing several years ago, and it is my hope that Andrew, Karsten, Annas, and Todd will reach similar conclusions, and it's certainly looking to be the case, which is super exciting. So yeah, we'll hopefully have this done in the not so distant future, and we can release it, and then all of you can get your hands on it. Okay, good. Well, I am going to wrap it up for now. If you have any questions, please let me know. They're installing our internet right now. I can see a guy climbing up a tree, and we'll have internet before long, which will be pretty exciting. So I can log on and see Anas's webinar tomorrow morning at 2 o'clock Bali time. All right, I'll leave it at that. Thank you all so much for your attention. I hope this was useful. If you have any questions, please let me know. Thank you.